Hello students, welcome to Legacy IAS Academy. Today we are going to discuss about the depreciation of Indian rupee and what is the impact that is expected from this on both the consumers as well as the equity market of India. So first of all, let us try to understand the context in which we are discussing today's issues. Is recently the rupee vis-a-vis dollar have closed with a record low of 77.72 in the last trading session of Thursday. This corresponds to a loss of over 6% if you compare this with the value of rupee vis-a-vis dollar in the last year. Now, this is not a peculiar condition with respect to rupee only. Almost all the currencies, especially of developing market, is witnessing a downfall vis-a-vis dollar. The problem exacerbates because the depreciation of rupee is not the single problem. This has been compounded with the problem of increase in the rate of inflation, increase in the interest rates, and the exiting of foreign investors from India, which have caused a sharp downfall and plunge in the Indian market. The depreciation is expected to impact the economy in general and various segments, basically export, import, as well as fuel prices, and is expected to increase the inflation to even higher rate. Now, question comes that why suddenly the rupee has started its downfall. The first reason is obviously the Russian invasion of Ukraine that have caused a downfall in almost all the global currencies with respect to dollars, and the developing market currencies have witnessed a downfall of almost 4 to 7% since the February 24th, that is the day when Russia invaded the Ukraine. The second problem or the second reason is the rise in the dollar index. So let us try to understand this in more detail. What is a dollar index? So dollar index, also in short term referred as DXY, is actually a weighted geometrical mean of dollars value relative to the total 6 other currencies. So basically dollar index gives us idea about the value of a dollar vis-a-vis a basket of 6 currencies. Which are these 6 currencies? So first obviously it is the euro, then we have Japanese yen, then we have pound sterling, then Canadian dollar, Swedish krona, and Swiss franc. The respective value or weight of these currencies you can see in the given pie chart. Euro holds highest value with 57.6% weightage. Then we have 13.6% is of Japanese yen. Then we have pound sterling, that is almost 12%, Canadian dollar 9%, Swedish krona at 4%, and the least weight is of Swiss franc, that is almost 3.6%. So basically, if dollar index is rising, that means the basket of these currencies are actually depreciating, and with respect to that, the dollar value is rising. So if dollar index rises, it actually causes depreciation of all other countries' currencies as well, and that is what is going on in India as of now. So the rise in dollar index. The reason is very simple, because dollar is considered as a safe haven, and that is why whenever we have some geopolitical disturbances or some global economic crisis, most of the investors flee to dollar and they start to convert their assets into dollar. That causes increase in the demand of dollar and thus decrease in demand of the other respective currencies. The third reason why rupee is in a plunge is because we have seen or witnessed outflow of a very large quantum of funds from the Indian markets, and if I try to give you a figure, it's almost 1,68,000 crore. The foreign portfolio investor, foreign direct investor, foreign institutional investors have pulled out this much amount of fund in last quarter, and mainly the reason why the outflow of fund is happening is because United States, the Federal Reserve of United States is currently increasing the interest rates, and that is why the funds, the investors are fleeing toward more safer investment options, and also they are getting much more higher interest in the United States. That is why we are witnessing this withdrawal of fund from Indian market. Then the other reasons can also be because the import cost is rising, and it is mainly due to the supply chain disruption that has happened mainly due to COVID pandemic as well as the Ukraine war as well. Second is we are witnessing the growth in the current account deficit, that is also causing pressure on the Indian rupee. And if I try to give you a figure that the trade deficit, the merchandise trade deficit of India has witnessed a maximum increase of almost $20 billion, and as per experts, it is believed that in coming quarters it can even see the maximum deficit which has not been observed since year 2013. So that also has put a pressure on Indian rupee. The last point is that we are seeing a sharp jump in the Brent crude oil, which has reached its maximum price or reached its maximum price in last 14 years. So what is going to be the impact of all these and the depreciation of rupee? So first of all, obviously, if rupee is depreciating, that means the value of rupee is declining compared to dollars. So import cost will rise, and if import costs will rise, that means on a domestic scale, on the nationwide scale, it will cause increase in the import bill, which can also give push to the inflation or the push to the inflation. Second, due to the increase in the price of crude oil, it will also cause problem with India, because 80% of India's oil and gas requirement is made by import. So that will increase its import bill as well, and that will actually trickle down to all other sectors of the economy, because the whole economy is actually driven by transportation. And if oil and gas prices rise, obviously the transportation cost will rise, and if transportation cost will rise, then it will cause rise in the food prices, rise in the other commodities prices as well. However, on the positive footnote, experts believe that rising in the value of dollar vis-a-vis rupee will actually weaken the rupee, and if rupee is weakened, it will obviously have cause a headache to importer, but it will cause increase in the competitiveness of Indian goods and services, because domestic demand, or we can see the foreign demand of domestic goods, will increase, and that will have a kind of silver lining for the Indian exporters. So if briefly try to summarize that due to the depreciation of rupees, who will be the gainers, who will be the losers? So obviously the exporters are believed to be the gainers, because their competitiveness may rise. But here we have a catch. The catch is that almost all the developing countries or developing economies currency is declining. So this benefit to exporter is not only restricted to India. This benefit is extended to other countries as well, for example Southeast Asian countries and Turkey, and that is why exporters will not only benefit immensely only from the this downfall of rupees, but to get benefit or to gain benefit, they have to enhance their efficiency and reduce their production cost, and by doing so they can improve their competitiveness vis-a-vis exporter from other competing countries. Then the second gainer will be obviously IT sector, because IT sector amount to a large extent of export from India, and third gainer will be the banking sector. Apart from this, the loser side, we have large number of entities. For example, all the importers will be a loser, because the import cost will rise up. The auto sector will be direct loser of that. Then we have real estate that will lose from the depreciation of Indian rupee. And then we will have travelers and students in particular, because when the travelers, Indian travelers visit any other foreign countries, a higher number of rupees, or they'll have to pay higher value of rupees to gain the same amount of dollars they were getting a few months back. Similarly, students who pay their tuition fee in the US dollars, they will also have to convert the Indian rupees into the US dollars, and thus they'll have to shell out, or at least their parents will have to shell out a huge volume or huge quantum of rupee to gain the same number of dollars they were getting a year back. Now, how to mitigate the impact of depreciation of Indian currency? So the most important method that is adopted by companies, exporters, importers, is through hedging. However, the cost of hedging is also rising, and as of now it is at the 4%. So this is something also we have to keep in mind, that hedging is not only effective. Hedging is only effective when the cost of hedging is relatively lesser, in the range of 1 to 2%. Second is RBI can take certain action to cool off the depreciation of rupees. Now RBI also does not have free hand. It also have a certain restriction. It cannot go beyond that to cool off the downfall of rupees. Third is focusing on increasing the competitiveness of exporters, and that is where Make in India comes into practice. This will help both in boosting the competitiveness of exporter, as well as in decreasing the dependency of India on the import of such commodities or such materials that can be constructed or developed in the India. Now hedging, since we have discussed about hedging, so what is hedging? Basically, hedging stands for a kind of investment that is made with the intention of reducing the risk of adverse price movement in the asset. So what does the future holds for the Indian rupee? So as per, if we believe the expert, they believe that the currency will face more and more pressure as inflation is on an upward spiral. And especially if we try to take into consideration the global scenario, we are witnessing a complete supply chain disruption, largely due to two reasons. First, China is following a zero COVID policy, and that is why they have put a whole city in lockdown, especially the biggest city of China in terms of economy. The Shanghai was put into complete lockdown, and the war in Ukraine. So these both have completely disrupted the global supply chain, and that is increasing the inflation all across the global economies. That is also causing a downward pressure on the rupee. So experts believe that in coming few weeks or few months, we will see rupee going somewhere up to the level of 78, and after that it can try to find its actual place vis-a-vis dollar. So obviously in the coming days we are not going to see any upward trend unless and until some we can say miracle happens. So rupee will try to find its foothold in the range of 77 to 78. So that is all about this particular issue. I hope you understood about this concept in detail. Thank you very much.